Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the number one U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to the show, Mark.
My pleasure. Thanks
Mark,
for having me.
You have a special offer for our listeners?
Well, we sure do. As a little bit of incentive to sign up, we have this 50% off offer for any of our subscriptions. So when you go to VRTrader.com, simply enter in the promo code spot where you sign up for the newsletter, the promo code 2020 half off, 2020 HALFOFF, and you get half off any of the products you sign up for.
Mark, what's your overall market outlook?
Well, I've been pretty cautious, I'll be honest with you, since late May, and the old sell may go away, and the overall market measured by the S&P and Dow moved a little bit higher, but it's been pretty much trending sideways for several weeks, while, as we both know, the NASDAQ high flyers just took off to the moon, with that index actually posting new highs. So I'm looking pretty dumb in terms of calling caution flag for the market. If you were long NASDAQ issues, including names like Tesla and so forth, you could care less about, the timing of the market, so to speak. They seem to be acting a little more tired here, though, in the last few days, and we had that big blow-off in Tesla, so, maybe we finally hit some type of short-term top there. There's so much money being printed, there's so much incentive to keep the markets liquid, I think part and parcel to the market not declining more than it has, is, part of, that scenario where we just have a lot of, not free money, but it seems like free money, though I have read some reports that the Fed has been tightening up a little bit, not as loose as they've been in previous weeks. But we should be looking for, the same old concept, sell may go away. I mean, generally we run into a period of indigestion between now and the fall, and you've got the U.S. election. So, I'm still thinking, there's a shot that we should have a little bit of a correction, maybe even a very nasty one at some point here. We had some bad news about some bank runs in China that came out overnight. I don't know what that precipitates, but some Chinese stocks started to sell off, and whether that's the canary in the coal mine, or there's going to be another trigger, or whether it's another virus, or who knows, maybe it's an asteroid coming. I mean, there's something out there, I guess, will trigger, the concerns. You have earnings reports coming next week from a lot of companies. If they're, more optimistic, then maybe the market stays up a little bit longer, then has a bit of a correction. But I can't help but think with just the U.S. election alone, Jim, the uncertainty regarding that and the possibility if Trump doesn't get reelected, what that means for the equity markets, I think it's not very healthy. I think there could be a huge correction, and the anticipation that a lot of the pro-business actions taken by Trump are reversed and taxes are increased and so forth. So unless it's a bunch of BS and the Democrats come in and they keep the same programs as Trump and they just criticize them just to get elected, and they really don't make any changes, and if that's the case, then maybe the market may initially drop and come back up again anyway. But I do point out that even though I'm not particularly fond of the platform of the Democratic Party by any stretch, it doesn't mean they're going to adhere to that platform. And we also learned over the decades that they're bull and bear markets, no matter who, what administration is in power, so to speak. So sometimes there's other things that control, the business cycle, for example, that control the swings of the market. So you can't just, run to the hills and think that we're going to get a one world government and it's all going to be communism and socialism so fast, as we all are being warned about. Of course, the riots in the streets and the police situation aren't the greatest things in the world either, but the bottom line is we're trading them. I thought the S&P would do a little bit better, the Dow maybe catch up to the NASDAQ here before we actually got a bigger correction. We'll just have to see what happens here in the next few weeks. We're playing it close to the vest, but I would say if any big correction, the way I read it, would be a buying opportunity, and we'll just have to measure both the time for that and the amplitude as it unfolds. I mean, day to day, I don't want to beleaguer or stretch out the response more, but there's always opportunity. There's always something moving. We always find some trading opportunities, and one, for example, today, Virgin Atlantic, which is, of course, the company that proposes to send people into outer space for enjoyable ride around the planet and so forth. That stock took off because some new executive, I believe, from Disney decided to come in and join their board of directors, so the stock jumped a couple, 3 points today on heavy volume. So, there's always something out there moving, and, whether it's gold and silver or whether it's solar stocks, long or short, we're going to find some ways to profit by the movements in the market, and that's why we sort of pride ourselves here at VR Trader.
How big a factor are these millennials who got into the trading of markets after the sports betting was shut down? Are they a big factor?
It's funny you should bring that up. I was just checking on the last few days, and I'm obviously way behind the times, and I'm sure you've heard about the platform called Robinhood, and thousands of young people, maybe not only young people, on this website trading. From what I understand, you can actually buy fractional shares that they're able to somehow get you into a stock like a Tesla. You can't really afford even one share, which would be, $1,500. You could somehow get fractional ownership by being a member of their platform and having money with them. So I'm checking all these details out, but you have 50,000 traders just on that platform alone, and they come out with little blurbs every day on stocks. And we had a lot of people sitting at home because of the COVID situation, and I think we've talked about this before. I think a lot is related to the millennials, or those who are just the retail traders who are just at home. I don't think the institutions were so involved on the downside or the upside. I think most of the institutions have allocations for their clients. I talk to a lot of people that do this kind of thing, and they have their models and they rebalance at certain times. Or when the market plummets, what did plummet? 10,000 points, the way it did, or almost 10,000 points in the Dow, and more than 1,000 points in the S&P. They're not out there selling and buying and selling and buying. They sort of get caught with their pants down, and they reallocate quarterly or annually. So the big players, that manage a lot of people's money are pretty much like, frozen with their, like deer in the headlight scenario when something like this happens. And I don't necessarily think they were in there jumping with both hands buying stocks when the market was down either, because that doesn't necessarily fit their pre-arranged computer models and programs. So it probably was the millennials and the retail people that had a lot to do with this sharp market advance. I'm not saying that some big players didn't, play or trade, because there are a lot of hedge funds and so forth out there that do a lot of trading. But I think the millennials did have a lot to do with it, because also a lot of the names that were moving were the millennial type stocks. Like the Zoom, ZM, and the Netflix, and the Amazons, and of course Tesla, and names like that. So I would think that there was a big component to it.
Some of my guests have pointed out the problem with using a platform like Robinhood. Yeah, you don't pay commissions, but they also don't give you any advice or guidance, and you're just setting yourself up for a major fall. Whereas if they subscribe to somebody like you, you're getting, experience, knowledge, and models based on past markets for you to make informed decisions on. Are these people who have just jumped into the market without experience being set up for a major loss, a major disaster?
It's a tough question to answer because it's a funny thing you should say that. One of the expressions I have is some of the dumbest people I know make the most money in the market. And I know that sounds contrary to logic. Sometimes, for example, people that were long the indexes, even in the financial crisis in 2008 and 9, and so it dropped, and then the market comes way back with a vengeance in these last few years, and they just sat tight, and they're doing just fine with their retirement now. And just this past February, March, April, we had this big sell-off, people panicked, and now not only did they come back, particularly with the NASDAQ names, they exploded to even higher highs than anyone would have imagined. And I guess Tesla is sort of the extreme example where stock was 900, goes to 300, then goes to 1500. Or it's actually 1700 was the high. So some of the quote unquote dumb money, people who just held their, positions in their 401ks, whether they're holding NASDAQ names or just the indexes, came out pretty well, and they're not so smart. And I'm sitting here trading all day and making, calls in the market, and that's sort of what I do because, I enjoy doing it. I'm just part of my personality, I guess, being an old floor trader and, enjoying the action and so forth. But I look back and say, gee, if I just, put all my money away, did nothing, and just sat still and net, would I be as far ahead as some of these people who did nothing? Or am I just, trading a lot and creating a lot of activity, but the net result may be the same or less than somebody who just sat and held a Tesla, for example, who did nothing with it or just, said, I believe in it, and they're not using much logic and they're not using much emotion. They're just in there, and, again, the expression dumb money. So, honestly, I think the people that, buy these stocks, might have more, quote unquote, sense than even the professionals, including myself.
Well, it's like the people who go to the racetrack and bet on the prettiest horse or on the color of the jockey's jersey.
I know. My mom used to play the horses a lot, too, when I was a kid. I grew up in Florida. We used to go to Hialeah. The track used to exist back then, and she was one of the best pickers of horses I could imagine. Even when in her later years she was good at doing it. Maybe that's probably why I'm in the market. Maybe I picked up some of the instinct to speculate, but I never got into the horses. But yeah, she was very successful. I don't think she participated in a race she didn't win something. And some people just have a knack for this stuff. It's a sixth sense, like saying somebody can play piano naturally, and others could practice their whole life, can never achieve that level of success. So but we're getting off a little bit of a tangent. But I think, it's sort of the luck of the draw. But I think, if you look at common sense over the last 100 years, what did stocks do? I mean, they generally went up. And yes, there's been big shakeouts, but inflation, government intervention, new ideas in technology, the growth, the need for companies to grow and expand all drive prices ultimately higher and higher. And I guess if you do nothing and you sit still and you're diversified and you have the patience, you'll do just fine. And if you're smart enough to be in the hottest group or the hottest sector, which now has, of course, been the high-tech NASDAQ triple Q type group, you're smarter than anyone else.
We'll have more with Mark Leibovit right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Mark Leibovit. Mark, can you tell us more about your volume reversal indicator and where traders can get a hold of it?
Sure. This is for those of you out there who look at charts during the day as I do and are technically oriented, and I'm sure you do, there's a ton of indicators out there that you can put up on your screen, from anything from moving averages to relative strength indicators and stochastics and all kinds of stuff, Fibonacci resistance levels, support levels. I mean, there's hundreds of tools out there. So I created one back decades ago. It's strictly a volume-based, very simple for my floor trading background. It's called the volume reversal, and it's a tool that you can plug in and put up on the screen as I do all day and look at for my analysis of the charts, and it shows you when buyers are coming in and sellers are coming in, particularly off lows and highs, and I use it as a tool for, short and near-term trades, because you can put it on weekly charts as well. You can see weekly shifts of volume to the upside or to the downside. It's called the VR, volume reversal, and there are two platforms that have it. One is very big, called TradeStation. They're based down in Florida, and they actually have a brokerage component to them, and the other is Metastock, and they're based in Salt Lake City. And both of these are companies where if you get that platform and you say, hey, I want Mark Leibovit's volume reversal, you can put it up on your screen. There's a monthly fee for doing that, and you can see what I'm looking at, and you can look at the indicator that I've been utilizing for many, many years, and I found it, very successful. Nothing is perfect, but it's a great tool. Very few people have it. You can only get it on a couple platforms. It's not universally available like all these other indicators, and I think it gives you a little bit of advantage. So you have to go to Metastock or TradeStation and sign up for they call it the Leibovit volume reversal.
We'll have more with Mark Leibovit right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what market sectors or stocks are attracting your interest?
Pretty much where we were in the last 3 weeks, Jim. The solar stocks have been, I must have been pounding the table on these here for the last month or so on these interviews. They got a little tired today, but had a big run here in the last few weeks. I don't think that's over. I think maybe a pullback is in order, just as for the overall market, but, big interest in the solar, some consolidation in the industry going on as well. The alternate energy, fuel cell stocks and so forth. So a lot of the alternate energy type plays, lithium type plays, the lithium index, stocks that are in the lithium industry, because obviously they cater to the Teslas of the world. So, those have sort of been, the main areas that we've been paying attention to. The gold and silver market we sort of keep in the back burner here. I guess it's more of a buy and hold. I think the trend's up there, but the way I read the charts, they look a little extended here, and I think they need to pull back a little bit, frankly. But I think if you can focus on that group, I think here during the course of the year, and if there is a little bit of a setback, I think that would be another attractive area. So. And then I don't want to discount the cannabis stocks. They're pretty cheap, and many of them are coming off bottoms. And if you look at the chart, you can see how we've been in a bear cycle in the cannabis group from April of 2019 until I think about 2 months ago, and they're on this base building formation. They're coming out. Maybe they're anticipating legalization in the U.S. on a grander scale, or something else is cooking, but many of them are upticking, and I'm seeing some accumulation going on, and it only makes sense. I mean, the industry is not dead. It just got overpriced, overvalued. Many of the companies, got ahead of themselves and mismanaged their assets, and they really were run by people who didn't know the cannabis business. They're just people who were brought in, and they treated it like any business, and very few people really understood cannabis, because you can think about it, it was supposedly illegal for so many decades. Where would you really gain that experience unless you were doing it illegally? So but there's opportunity there. We're in a few of those names, and I think whether the Democrats get into power here in the U.S. I think it's federally legalized now or not. I think there's more interest in that sector, and I think in a way it could be sort of economically insensitive to the rest of the world. It's like alcohol and cigarettes and the vice stocks, as we used to call them. They can do well in any kind of economic climate. I think CBD and marijuana, along with gambling and tobacco and so forth, could all fit into that category.
Can you again remind us about your special offer?
Yeah, sure. It's 2020 half off is the promo code when you go to vrtrader.com. 2020 half off. Thank you.
Mark, thank you so much for being on the show.
My pleasure. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.